long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency, every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, but look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry, and there are definitely use cases for it, and there's utility for it, clearly, obviously. But there's different utility for Bitcoin, and I think that there as a base layer, there are going to be a lot of things built on Bitcoin, second, third layer. And they're going to be important to the financial system.
If you think Bitcoin is just some digital currency for tech geeks and libertarians, then think again. James Lavish, in his mind-blowing interview with Brandon Gentile, just dropped a prediction that will leave the traditional financial system quaking in its boots. Forget the norm. Forget the skeptics. If you want to know where money's heading, Lavish's Bitcoin forecast for 2025 is where the real action is. And trust me, it's not what you think. Lavish is all in on Bitcoin's long-term price surge, and he's not afraid to let you know why. He sees it going through the roof, way beyond what the old-school economists can even wrap their heads around. Why? Because Bitcoin's strength isn't just a market trend. It's a full-blown financial revolution that's driven by something that always wins: the constant devaluation of fiat currencies. The truth hurts, but every paper currency out there is crumbling against Bitcoin. Yes, every single one. Well, except gold. Yeah, that old relic that still holds a place in jewelry and the odd survivalist bunker. But guess what? Bitcoin's already outperforming gold in utility and value, and it's only getting started. Lavish is unapologetically confident that Bitcoin is the foundational layer of a new financial ecosystem, one where Bitcoin isn't just a thing, but the backbone of the entire system. He's predicting that Bitcoin's not just here to stay, it's here to reshape everything. And when it takes off in 2025, you're going to wish you got on this rocket ship earlier. As we bring you more clips from James Lavish's interview, kindly take some time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. They would help to boost the YouTube algorithm and support this channel's growth. Thank you for joining us again. Enjoy the video.
First things first, Bitcoin does move off of liquidity. We know that. And like I said, it's because it's being treated like a risk asset. So as liquidity expands, Bitcoin follows. It lags by about 3 months, somewhere around 2 or 3 months. And so we saw liquidity drained at the end of last year. And so now it's coming back up, but Bitcoin's it's still lagging. It still hasn't, if you chart them against each other, it still hasn't reached that bottoming out on liquidity. When it, after it does, it will start to rise again. Maybe it has gotten pretty close here in the last couple days. But so that is important for there to be liquidity. But let's just face it, there's no long-term liquidity will go higher, the money supply will expand. That's just reality. There's just no way in our debt-based system that we could sustain this without having a debasement of the currency. That's just the truth. We will still see the expansion of money supply and Bitcoin price going up, alongside that. So that's just the reality. Looking at that liquidity and what we need for Bitcoin to kind of reverse course here, and all of those other catalysts that you talked about, and I've talked about, the tailwinds. Well, one of the biggest one, like you just mentioned, is the full repeal of SAB 121. So this is an accounting bulletin that the SEC put out, and it was kind of it was a very strict bulletin advising banks and financial companies on how to treat Bitcoin, and it basically warded them off from holding it as an asset at all, and basically said it would be treated as a liability, and so really difficult for them to do anything with it, and so they just avoided it. That's why you had so much choke point 2.0, because, banks and financial companies, institutions just didn't want to deal with it. That's all been changed. The SEC, so last year, the SAB 121 was repealed by Congress. It was passed to be repealed because it didn't make any sense. It was kind of like an end zone run by the SEC where they were going to it was oversight by enforcement, and that was just, I mean, it's just wrong. And so the legislators were like, this is our job to come up with the laws and the rules. It's not your job as the SEC to just decide what you want to do and do an end zone run. So no, we're repealing it. And you got out of bounds, Gensler. And so it went to the president's desk, and as promised, he vetoed that. He vetoed it because this last administration, the Biden administration, was incredibly antagonistic to the crypto and Bitcoin ecosystem and community. They planted their flag and opposed them. And I don't know if it was because of the noise coming out of Elizabeth Warren's camp or her anti-crypto army or whatever it was, whether she's in the pocket of the big bankers that they didn't want Bitcoin because they know that it can be disruptive to their business. Whatever it was, they weren't ready for it. They went along with it, and he vetoed that repeal. We'll enter this year, and you have Trump, a new administration that is clearly very Bitcoin friendly and crypto friendly. And suddenly the SEC, they just strike the bulletin, abandon it, and now it's no longer in force. And so now the banks, this is the big deal, is the banks can actually hold Bitcoin as an asset and build products around it. They can build lending products. They can build collateralized products. They can do things that they couldn't do before. And it's a really big deal that if you have Bitcoin and you can work with your bank, whether it's JP Morgan or, or if it's Wells Fargo or Chase or Citibank, or whatever it is, you can work with them to use your Bitcoin as collateral for things, or they can create collateralized products or lending products for you. It's going to be a big deal, really big deal, because I know there are a lot of Bitcoiners out there who sit on a massive amount of Bitcoin that they don't want to sell, but they want to somehow monetize to use in their favor. They don't want to pay the taxes on it. They don't want to get rid of it, but they want to find a way to use it and benefit from it. I think that's going to be a huge deal, and eventually it'll trickle down into things like mortgages and loans against them, and using Bitcoin in just residential mortgages for collateral. So you don't have to put up your 20%. You can put up 10% cash and 10% Bitcoin or something like that. And it's going to be, I think this is going to be a big deal for both consumers, but really a big deal for the banks. They're going to be rushing to get these products out later this year as they get their head around and get their teams around this. So I think it's going to be a really big deal. And so what does that mean? Well, it just continues to march down that institutional adoption road, where you have institutions are embracing Bitcoin in particular, and they're going to be using it to build products and sell products to people.
According to James Lavish, Bitcoin's price is about to go wild, and it's all because of liquidity. Bitcoin's price doesn't just move randomly, it follows the liquidity curve with a 2 to 3 month delay. Yeah, you heard that right. The crazy part? Liquidity was draining out at the end of last year, but it's coming back now, and guess what? Bitcoin is going to follow suit. Buckle up, because this is setting the stage for a massive surge. The money supply is rising, and so is Bitcoin's price. And here's where it gets absolutely mind-blowing. With SAB 121 completely wiped out, the accounting rule that once prevented banks from holding Bitcoin, banks can now treat Bitcoin like any other asset. No more limits. The floodgates are open. This change is monumental because it allows banks to start developing Bitcoin-based products. Lending? Collateralized products? They're on the horizon, and they're about to change everything. Bitcoin's not just a digital asset anymore, it's becoming bankable, and the financial world won't know what hit it. Let's go back to the interview and watch more clips to gain insights from James Lavish.
For the viewers who don't realize this, Tether is currently, I think, the 6th largest buyer of U.S. Treasuries in the world. So
Wild.
It's crazy. So why would it be doing that? Well, it's doing that because it wants to peg itself to the U.S. dollar. And so, and again, why would it do that? Because people around the world want access to dollars. And one of the ways they can get access to dollars is through stablecoins. They can get on these platforms and buy the stablecoin on that platform. Another reason for it is that when you're on those platforms, you're looking for a little bit of yield with your idle cash. And how do you do that? Well, you buy your stablecoin with it, and that's what you're looking for, to have the liquidity that is pegged to the dollar rather than whatever your currency is that you can be buying Bitcoin with or the other cryptocurrencies with. Really important for people to understand that dollar dominance is predicated on the U.S. retaining retaining the U.S. Treasury as a global reserve asset. So people need to be buying treasuries. How do they do that? Well, if they're buying stable coins that are pegged to the dollar, they're going to be buying T-bills and treasuries. And so they know this. So that strengthens the position of the treasury, that you continue to have these stable coins buying these treasuries, which stabilizes the dollar, because people aren't trying to get away from treasuries, which means that they don't need dollars. Well, the world needs dollars. And the easiest way to do that is to have treasuries, because you can turn the treasuries into dollars. Now you go to the BRICS. Long term, I see the Bitcoin price higher, much higher. And that's because of the debasement of the currency. Every single currency that's being measured against it. The only one that isn't debasing as rapidly as gold, But look, Bitcoin's a better version of gold. It's not even close. It's such a better version of gold. I know people like to wear gold and they like to, have it in jewelry. And there are definitely use cases for it, and there's utility for it, clearly, obviously. But there's different utility for Bitcoin, and I think that there as a base layer, there are going to be a lot of things built on Bitcoin, second, third layer, and they're going to be important to the financial system. And so that having a trustless system like this is it's revolutionary. It's going to change the financial world. And if you just keep it to first principles, this is a network that is backed by 75 terawatt hours of energy, which is the equivalent of 20 full-time nuclear reactors running full-time. It's completely decentralized, and it is a fortress of network. It's a digital fortress of network power, and it's nation state resistant. That's how big it is, and that's how strong it is. So just keep the first principles. Don't worry about the price activity. It is going to be volatile. I expect the volatility. I actually welcome it. Why do I welcome it? Well, I'm an institutional professional investor. My hedge fund takes advantages of these drawdowns. We do things that enhance the returns, and we have drawdowns like this because we have the ability to do that. And you do too. If you just leave a little bit of extra powder and you're not always all in and you've got some powder, and you can take advantage of these drawdowns. And that's the volatility advantage of Bitcoin. So, and the fact that it's rising over the long period of time, that gives you these opportunities to take advantage of price swings. And I think it's a good thing. Am I nervous? Nope. Am I optimistic? Absolutely. Super optimistic about especially some of the opportunities we're seeing for the fund. Some of the private opportunities we're seeing for the fund that, other investors just don't get access to because we're involved in this space. And that's an advantage. And being involved in this space is a really big deal. And you got a lot of people on the outside that have no idea what's going on here. We're so early. I was talking to a colleague of mine who is in mainstream this morning. Intention is that everything's priced in. All the good news is priced in. That Bitcoin's at its peak. That's it. There's nowhere to go from here. I will not call his name, but I just think I appreciate the viewpoint. I just disagree. I think that there's a massive amount of upside here, massive amount of runway and adoption ahead of us that we have barely seen any of, and I'm super excited about it. It's an open, free market. There's no entity that is determining the price. I mean, you can buy and sell right here. You could have bought and sold 50% lower than here, 80% lower than here. It's and it will continue to happen. Coins will be redistributed, and it's because it's a completely decentralized system. It's decentralized. There's nobody in control of it.
James Lavish commended Bitcoin's decentralized and reliable system, which is supported by a substantial energy usage equal to 20 nuclear reactors operating full-time. He sees Bitcoin as a digital stronghold that is resistant to intervention by national governments. This unique feature distinguishes Bitcoin from conventional assets and makes it a desirable choice for investors looking for decentralized solutions. Meanwhile, Bitcoin network economist Timothy Peterson is bullish on Bitcoin's future, projecting a 75% possibility of new highs within 9 months. According to Peterson, Bitcoin is currently around the lower bound of its historical range, which coincides with the bottom 25% level, indicating a good rally. Meanwhile, expert CrazyBlock emphasizes the significance of the realized price for short-term whales at $91,000 and the cost basis of highly active addresses at $84,000 to $85,000. A drop below this price base could trigger selling, making this area an important liquidity zone. These on-chain cost basis levels signify decision points where market psychology swings, and traders and investors should keep an eye on price movements in these locations to determine trend strength and potential reversals. What do you think is the most significant factor that will drive Bitcoin's adoption and growth in the future? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.